I'm Chris Bunka. I'm the CEO of Lexaria Corp. Lexaria has been a public company since 2005, primarily in the oil and gas business. We've been very successful in the oil and gas business, and we've had revenue from our oil field since 2006. So we've had a pretty good experience. Last year, we made the decision to get into the medical marijuana industry. We've already successfully raised $1.25 million. And we've announced a joint venture in Ontario and are moving forward with that project. We're unique in a couple of ways. One is we bring multi-jurisdictional regulatory experience. So we have been in operation in Canada and the United States, not just as an exploration company, but as a producing oil and gas company. That means we deal with people like the EPA, the state regulatory boards, the federal regulatory boards, both for operations as well as for the security side. So we have a depth of experience there that really in the medical marijuana industry you need because it's a highly regulated sector. Secondly, we have already signed a joint venture. We've already raised some money. And one of the things that we think is vital is to have more than one facility in Canada. We believe there are some risks associated with having a single facility, such as should you be unfortunate enough to have a mold or a mildew or a spider problem in your production area, you could lose 100% of your production for a period of time. If you had bad luck, you might even lose your Health Canada license. That is an unnecessary risk for investors, and I would say to investors to really watch for that. So our business plan attracts and involves having multiple facilities in multiple jurisdictions in order to mitigate those risks and make sure if we have a problem in one location, it doesn't affect the entire company. Well, we've already announced the Ontario joint venture facility. So that's up to a 75,000 foot facility that we've JV'd with Untitled Corp. We are in the planning and development stage on that facility now. And what that means is we've hired architects, engineers, we're consulting with HVAC and plumbing and electrical people as we speak. We're consulting with the city jurisdictional, the municipality at this time. All of those plans are underway. And so investors should expect to see developments as that facility progresses through the design phases, through the approval processes, and then finally the construction and ultimately the licensing and going into production. As well as a company, as I've said, we want to have more than just a single facility, and that means that investors should be watching for announcements from us regarding our second facility and hopefully our third facility as 2014 progresses. We have not yet submitted our application to Health Canada. We have engaged a pharma consulting firm out of Ontario that's used to dealing, has 30 years experience dealing with Health Canada on these sorts of regulatory licenses. They will be working on our behalf to submit the license, and we're hopeful that our initial license application will go in during the month of June. It may be as late as July, but that's the period that we're looking at, and then we'll go in through the process from there. Well, I think it would certainly be Entertopia. Now, they are a sister company, and so disclosure, I am a shareholder. And fuller disclosure, I used to be the chairman and CEO of Entertopia, but I resigned a year ago. Entertopia, though, follows one of our main rules that I have for my company, which is they have 3 facilities either under construction or in the design process across Canada, and I think they've mitigated those risks of having just a single facility, which I think is a huge problem for many of the other competitors. So I think Entertopia is probably the leader of the pack, and perhaps Tweed, although Tweed, of course, appears to be fully valued, but they're doing a great job, and they certainly deserve a lot of credit for what they've achieved.